So we've got the most inventory in DFW since 2003. We have 5.4 months of supply, and that's a 20% increase in inventory year over year. Now, compared that to when we came out of COVID, post-pandemic real estate boom, where we had only 1 month of supply in North Texas after COVID. That is a big jump in supply. Robert, are the listings you have in the DFW area, are we having a hard time getting the houses
Fortunately,
sold?
yes. Yeah, it's been pretty brutal. And we're trying to set the expectations that it is a buyer's market.
Welcome to Silberman Realty's Property Desk Podcast, Episode 3, where we talk all things about residential real estate in Texas. Today is July 18th, 2025, and I'm Phil Silberman, owner of the company, and I'm joined by my co-host, Robert Vernon, who's a real estate agent with Silberman Realty. Robert, good to see you. How are you doing today,
Good
my
to see
friend?
you. Doing good. How about you?
Man, I am well. I'm very well. So let's talk about what we're going to cover in the show today. So, we've got a real estate news section and we're going to do some updates. We've got a DFW area market update. We're going to do an Austin residential market update. And then we're going to be talking about a lot of uninsured properties in Central Texas. So, tragedy from the floods, a lot of loss of life. And that's the main thing we're concerned about. But we're also going to touch a little bit on just how very few people had property insurance in Central
Yeah,
Texas.
it's a really bad situation down there right now. So definitely hearts go out to all of them.
Terrible, terrible. So now we're not a commercial real estate show, but everyone should also know what's going on with office space. So we'll talk a little bit about that. We'll do an update on office space. And then finally, or not finally, but next, rather, in our management minute, we're going to be talking about a new demographic that property managers and landlords should be looking at, and that's seniors. Retirees and seniors are a big demographic for rental housing right now in
Yeah, we're
Texas.
seeing a huge uptick in boomer aged renters where we used to not have that. Definitely selling out, cashing out on their properties, getting a little bit more of a easier lifestyle.
Yeah, we'll be talking about that. And then finally, in our Let's Get Legal section, we'll answer the question, can we require tenants to sign a non-disparagement agreement as part of their lease? And then answer the question of whether oral leases are valid in Texas. So, sounds like a good show. Let's get it kicked off with our real estate news section. And the first thing we've got is a DFW area market update. And this is from several articles that I researched before the show. But DFW is a buyer's market. That's the essence of the data, the article. Robert, you quickly agree or disagree?
For the buyers that are out there, yes, it is a market for them. Unfortunately, there's just not a whole lot of them at the moment. But yes, that's definitely correct. If you're a seller, you're having quite a hard time getting showings at this point.
Yeah. And here's the data we have. So we've got the most inventory in DFW since 2003. We have 5.4 months of supply, and that's a 20% increase in inventory year over year. Now, compared that to when we came out of COVID, post-pandemic real estate boom, where we had only 1 month of supply in North Texas after COVID. That is a big jump in supply. Robert, are the listings you have in the DFW area, are we having a hard time getting the houses
Fortunately,
sold?
yes. Yeah, it's been pretty brutal. And we're trying to set the expectations that it is a buyer's market. Your house cannot have ailments that are going to keep it from being purchased at this point. It needs to have new paint, new carpet, new flooring, updated appliances. It needs to be move-in ready. Buyers do not want to work on homes, especially at the elevated prices and interest rates that they're having to buy into. And frankly, they have the options right now. They're not squeezed to buy the only house in the neighborhood that's on the market like they used to during COVID. So yeah, quite a big difference there. I have other agents that I work with that I know that they go to the auction on the first Tuesday of every month pretty periodically. And they've noticed a lot of COVID homes recently have started showing up at the auction house. Houses that don't need a lot of work. They were purchased in 2020, 2021, 2022. So it's easy for them to flip these homes, but at the same time, they don't have any work for their contractors' crews because they're usually getting very distressed homes in into these foreclosure markets. But right now, it's not the case.
So
Uh,
hot tip out there, there's some
yeah.
opportunities on the first Tuesday of the month at these foreclosure sales where you've got people that bought high during the COVID boom. And it sounds like there's some bank foreclosures. Well, I'm going to dig into that data, take a look at that. And then, Robert, going back to our listings and the listings you have in the DFW area with Silverman Realty, it's to me, you got to price these things right. Are we emphasizing, hey, seller, look, if you can't come in high and let the place sit, you're trying to get your
Well,
sellers.
I mean, honestly, I won't even take a listing right now if they want to do that because it's just a waste of everybody's time. But you got to set the expectations up front of what the market is like, what it really is going to take sometimes 2, 3, 4 months to get the house sold. If you set it up, the expectations up front, then there's not a lot of disappointment there. It's just not a lot of buyer pool at the moment. We really could use some interest rate change, just something change on the macro front that could really get the housing market moving again. And we
People,
just don't have
people
it yet.
people cannot afford the buyers cannot afford the prices. They're still elevated. And Robert, to speak to your point again about, hey, you're not going to take a listing if the thing's overpriced. Here's some data to that. Fit in Collin County, where we do most of our business, I think 51% of sellers took their homes off the market in Collin County. That means they put it on with the realtor like you,
Mhm.
got frustrated and took the thing off. That's half of everything that was put on the market. That's crazy.
Because the prices over there have been so elevated. There was a huge influx of people that have come in and tech boomed into the state. A lot of those jobs have been pulled back. And so it's harder for a certain demographic of people out there to keep these homes. And they're actually calling us for the side. They're wanting to see what their options are like before they've run out of contract with their other agent. They want to
Yeah.
see what can I get realistically to rent this because they don't want to quote unquote give their house away is what they say because everybody's still under the assumption that things will get better and they don't want to be sellers of the bottom and they're
Yeah.
trying to do everything they can to avoid that situation.
Yeah. And that's a phenomenon that always occurs. We manage a lot of properties. Anytime we've got a down real estate market on the sales side, we're getting lots of calls where owners, they couldn't sell their house and they're looking at, okay, let me lease it, man, have it managed for a while and then maybe put it back on at a better time. Who knows how soon we get there? Is there a better time around the corner? Who knows? So,
If you asked lenders and agents 2 years ago if we would still be in this situation, they would emphatically tell you no, mostly because the narrative was that we were going to get lower rates a lot sooner than what we got. And so that's one reason why you can't always trust the national narrative on these things. And you really should prepare for worst case scenarios when you're going into buying a house in a market like this.
well,
Don't always take the
uh,
national narrative.
if you ask lenders and realtors anytime if things are going to be better in the future, the answer is always yes from a realtor or a lender.
So, yeah. But you
Now
don't
is
know the
the
timing that is what's really difficult at times. So,
now's the time to buy. Now's the time to sell. Now's the time to take out a loan. Now is the time. It always is the
it's
time.
always the times.
And last data point here: new construction. This is new construction prices in Collin County down 10.3%.
They're
All right, let's
feeling it. The new construction guys are feeling it now. They
yeah.
weren't for the first couple of years of this stagnation, but they're definitely getting the pinch at this point.
Let's move on to Austin. Let's do our Austin market update
Sure.
because that's a good segue because new construction there is playing a big part in the Austin market right now. So, Austin housing supply growing faster than any other metro area in the country except for Denver. So, Denver
Yeah.
is really bad. Austin is right behind it. Listings in Austin jumped 70% year to date. And Austin's basically in a buyer's market. They're trying to be kind about it. We're shifting or whatever. I think
Well, do
it's
you know
already there.
why? Do you know why it's hitting the state?
Tell us.
Well, way more small tech companies were fueling the fire during COVID and the relocation that happened to Austin with the whole advancement right now, what we're seeing in AI and companies pulling back on the froth of their companies. The majority of the folks who move to Austin are the ones getting affected by the macro windfalls the most. And you couple that with Austin being the highest elevated year over year growth in pricing during the COVID boom, it had further to drop. And so when everybody starts to drop some, when you're the most overinflated one, you're going to have a harder pullback. And taking that on along with the lower end tech jobs that have been cut out, it's just been a recipe for disaster for them there.
Yeah, it's a big correction in Austin, but homes are still high. Median home price in Austin, 525. That's a heavy lift. That is a chore for the regular home buyer. So you're still not seeing a lot of buyers coming out of the woodwork here. New construction is helping. Here's some data that I almost fell out of my chair when I saw this, and I look at a lot of data, so it's unusual. Their builders are still building, so the builders are moving the supply. 4,000 permits for new construction homes were pulled in Austin, but they only sold 520 in the same period. So they're building way more than they're selling.
Might
And you
want to
think,
see who's doing that. Open some
right?
short positions, no financial advice.
This is cool. Austin just spent $3.5 million on this piece of software. That's not cool. If Austin and government can do one thing, it's spend money. But they spent it on this AI powered building permit system called eCheck. And what this thing does, it's like accelerating and streamlining the permit process in Austin. So humans may not even be looking at permit requests in Austin. If they're just going through AI and stuff is getting approved and it's accelerating.
Welcome to the new world.
Yeah, faster instructions. So I don't know whether the software is going to work, but it's rolling it out. And maybe you think at some point these builders are going to stop building, right? Because it's like they're not going to build at losses, but right now they're not.
Sometimes they're reactionary instead of they try to do things ahead of time.
A little bit of a lag. All right. Next
Yeah.
piece of kind of real estate news or update. We're talking about a lot of uninsured properties in Central Texas wiped out by the floods. I'm sure everyone has seen the Central Texas area, hill country, been just devastated by flash floods, biblically proportioned flash floods. And people in Central Texas just do not carry flood insurance. 2%, the data I saw, 2% of all Texans in Central Texas have flood insurance. It's a mental thing, Robert. I live in the hill country. Why do I need flood insurance?
A 100-year flood, it's not going to happen to you.
No,
Your insurance cost is already very high. You're going to take somewhat of a risk on something that pretty much never happens to
no.
save yourself some money there. Yeah, it's a situation for them.
The largest insurance gap in the country. And just reminder, tip out there, reminder, your regular homeowner's policy, your casualty and hazard policy doesn't cover flood. You have to get a special policy. It's a federal policy, and the limit is $250,000 through the government. And even if you had that, it's not going to cover your whole house being wiped away. So even people that had that amount, they're still going to have to rebuild. And then you have this thing called an excess policy. I bet almost nobody had that in Central Texas because that's something we do down in Houston. I'm based in Houston. If you have a house near the bayou in Houston, you might have the FEMA 250, and then you have an excess policy with Chubbs or Lloyd's of London or somebody like that. But excess policies are expensive. And as Robert, as you pointed out, insurance in Texas is through the roof and people just couldn't afford it. So last year we had 39,000 people cancel their flood insurance policy, which is one of the highest rates in the country.
Yeah, and you also got to think there's a lot of homes, more proportionate than ever, that don't have mortgages on them. And if you don't have a mortgage on your house, there's no one forcing you to have that insurance coverage anymore. But I know a lot of people who did not have mortgages anymore would take that risk because insurance has already gotten so high. There's a lot of uninsured homeowners now than there ever has been.
A lot of people in the floodplain that own their home outright, they didn't have the lender requirements for the flood insurance, and they're just thinking, hey, it got so expensive, I'll just do without it. Not a good thing. All right, now let's move on to our next sort of update. We're a residential show, Robert. Silverman Realty is a residential, primarily property management company, but does a lot of sales and leasing, primarily residential. But this is a commercial update, office space update. These numbers just jumped out at me. And I think a lot of our listeners are working in offices or at least in some sort of hybrid environment. All of Texas's major markets, if you had an office vacancy rate between 21 and 25%. I think Houston had the highest with 26.1%. And that doesn't count shadow vacancies. There's a lot of offices out there, Robert, where companies have space and employees just aren't coming in to use them. Austin had the biggest decline from 2019. So in 2019, Austin had a 10% vacancy rate. And then in 2023, that jumped to 22%. And that's Robert, again, you hinted at this talking about some of these smaller tech companies, the bigger tech companies. Meta did not realize that they took a bunch of space that they didn't need and they're subleasing it out. Austin's kind of experiencing the perfect storm in office
Right.
vacancy.
It's staggering to see the numbers too, when you see these office buildings sell for like the price that they would sell for in like 2017 to 2019 to what they're selling to for now. I don't think the national narrative is pointing out how big a difference those sell prices are. Sometimes they're cut in half, 75% off what they were selling for just 6, 7 years ago. So that's a very vastly changing landscape right now in the office space.
That's a big haircut. Houston and DFW, a little bit different from Austin. Houston, DFW, we overbuilt in the 80s and 90s where we thought everybody needed a suburban office park on every corner in the DFW area or the Houston area. So you've got a lot of that still playing out. A lot of people talking about this bifurcation, just people, the companies, people, employees, what they really want are these like resort style offices where there's a gym and a Starbucks and this great area. And those are doing very well.
You sent everybody home for a couple of years to work. You've got to incentivize them to want to come back to the office. You can't just
No.
put them in a square cubicle anymore and just say, have fun.
Yeah.
It's a competitive situation with that now.
What really is tanking are these Class B offices. I took at the law firm, many of the listeners know I'm also a lawyer. At the law firm, I took my number two guy, Chris Hield, who he co-hosts the law firm podcast with me, the Weekly Docket. And he's on an office space. I took him to West Houston, where one of our other lawyers' offices. And I said, hey, here's an office for you. It's Class B. He looked at it and he was like, I wouldn't bring my dog here. I was like, it's fine for this other guy, but I guess you didn't want it. But Robert, what's your take? Would you remember in the old days when you worked for one of my other real estate companies, did you go into an office then?
Oh yeah, I remember we went into that one office. It was what you were just describing. Very just square cubicle, square building. Didn't have much. One small restaurant at the bottom. It'd be hard to entice somebody to go want to work in that particular environment today. That was what, 15 years ago.
So you would not want to do it. Okay.
Oh no. Personally, I think I'm way more productive just working wherever I'm at. And I think a lot of people feel that way. But there is a big segment of the population that wants that office experience. And I know the big corporations want that to come back. And so they're trying everything they can to get it back in.
This B office space is tough. We've got an example here, Midtown Central Square. That's kind of an older building built in 1957, 2100 Travis in Houston. That's a tough gig, Robert. You mentioned these things get cut in half. That building was valued at $60 million in 2022, and it's now valued at $33.5 million. I don't know how you survive with that kind of cut to your asset value, but
it's been brutal. But you've been seeing that for 2 years now. Just sales have just been like that across the country, and it just makes you wonder how anybody's surviving in that space. Banks that had lended in these spaces, they've got to be taking huge losses on the back end. No, so we'll see if we ever get true numbers on that.
The banks don't want them back. We're trying to figure out what to do with these things. You hear a lot of the buzz about these condo conversions, but I'm hearing from my developer friends, they just don't make sense. You've got an office building built in the 80s. You've got these big floor plates and the windows are all on the exterior. And so you don't have enough windows. The plumbing and the HVAC is all wrong.
Right. And you want someone to come in and do all that stuff at the high rates that we're in right now. Like, it's just not incentivizing for these developers to do it in the interest rate environment that we have to convert these properties. I think they would do it if we did have better rates.
The numbers just don't
make
work
sense
on this stuff. So
it's hard.
What do we do with my old Houston office? We used to have a big office in Houston, Robert, before we went virtual, and that one got converted to self-storage. So I don't know.
Oh, wow.
Maybe we just demolish everything, do apartments and single family. I don't know, but that brings us to our management minute. We are a property management company, first and foremost. Here's a story. We're talking about seniors, retirees. They're a big demographic for Texas rentals right now. Austin's share of senior renters rose 80% in 10 years. That's third nationally in senior rental growth, okay? That's a lot of old people, Robert, moving to rentals, okay? DFW, Houston, not far behind. The DFW logged a 66.5% jump. Houston was up about 60%. this is really matching sort of these broader Sun Belt migration patterns. Robertson, in any of the places we manage that you lease for us, do you see seniors renting these properties or not really?
Absolutely. Yeah. I didn't really think about it too much until you brought it to my attention, but
Yeah.
we do have a lot more where, say, the boomer generation is cashing out on their home equity, using for part of their retirement to have a cush retirement, going and renting something, putting all the house maintenance, the property taxes, all that stuff on somebody else.
Mm,
You are seeing it a lot more.
yeah,
And on the other side too, you're also seeing the highest, I think the median age right now for a home buyer is somewhere in the 50s,
that's
where
crazy.
historically it's in the 20s. And so
Sure. Yeah.
really it's seniors are the ones moving the markets in both directions right now.
Yeah, they don't want the high property taxes. You don't want the high maintenance, you wanna
Right.
downsize. And they can sell their long-time home, and they can pull the equity out, they can invest it, and then rent. So, there's also this baby chaser phenomenon. Was not familiar with that term. Had you heard of that term, Robert, at all, or?
I'm gonna assume that it means that they're chasing the direction where maybe their kids are going.
Yeah, yeah,
I
yeah.
had
It's
that in
for
my own neighborhood.
yeah, not the kids. Yeah, the kids have grandkids, and the
Right.
grandparents are following the grandkids, so the kid
Absolutely. Yeah, several of my neighbors are that exact person. So yes,
yeah.
that is very, very commonplace.
The kids are moving to Texas and the grandparents follow. Here's the takeaway. If you're a property manager like us or you're a landlord property owner, need to start asking ourselves or yourself, what do seniors want in single family rental housing? Do they want smaller yards? Do they want more accessibility in bathrooms? Do they want I don't know what they want, but
They
we need to
want
start
lower maintenance. They want lower electric costs because now
okay.
they're on fixed incomes. So
Okay.
they like the townhomes, they like the condos. They want something that's going to be a little bit less on them as a tenant because sometimes when you do rent a home, you still have a lot of those maintenance costs. But
Uh-huh.
condos, townhomes typically don't have them as much. And those are
Okay.
what you would consider a downsizing property for them.
Okay. That wraps up our updates on our news. So let's move over to our Let's Get Legal section. The first legal question we're answering is, and I'm again uniquely qualified for this section. I am a lawyer, so we can tackle these. And Robert, you can help too. Tenants can be hard to please, all right, especially we got some tough owners. And we worry a lot about these reviews. And Robert, you've been helping out with some of the reviews where these tenants leave these crazy bad reviews because the owner won't fix anything, whatever. And what do you think about asking tenants to sign a non-disparagement agreement? So you put it in the lease, hey, tenant, as a condition of leasing this property, you agree to never leave a bad Google review or any review wherever. What do you think, Robert? Does it you
Uh,
like it?
from from someone who's not a lawyer, it seems like it's there's something in there probably against the law, I would think.
Yeah.
You could probably get it signed without 99% of your agent or your applicants even knowing that yet if you put it at the beginning of the lease agreement. Enforcing it would probably be another thing and could be a
Yeah.
battle on
Yeah.
your end once they do decide to do that. Because like you said, a lot of times we're that middleman where we give them the answer they don't like, but we're given the answer
Mm,
that the landlord wants to give. And so we get tackled with the bad review because of it.
yeah.
And that is a challenge.
Yeah, it's a bad deal. But Robert, you've got good horse sense. It turns out there's something called the Consumer Review Fairness Act. This was signed by Barack Obama, I think back in 2016. And the act basically prohibits any provisions in form contracts that stops consumers from being able to write a truthful review. So focuses on form contracts. I think the TAR, the most common lease we use is Robert, the Texas Association of Realtor Lease. That's probably a form. You can't just sneak in this, hey, don't leave a review ever. You're
Okay.
probably going to be in violation of this Consumer Review Fairness Act. Could be a little different if you've already got a current tenant and then the current tenant is negotiating, they're not happy, and you end up doing some sort of custom contract for a release. Maybe you can do a non-disparagement provision in there, but didn't get that far in the research. The preliminary answer on this is no. Let's not mess with it. Stay away from running afoul of this act. But there's your answers.
Yeah,
All
it
right.
sounds like you're running up the wrong tree on that one.
Yeah, yeah, for certain. All right, next legal question. Are oral leases in Texas valid? Yes, but they can't be longer than over a year. Under the statute of frauds in Texas, which is a codified law that requires certain types of contracts to be in writing. If you're going to do a lease for over a year, that has to be in writing. But you can have an oral lease in Texas. Robert, we take over a lot of rental properties. Have you seen any where the owners just lost the lease or they don't have leases? Do you remember any of
Oh yeah,
that? Or
plenty of we get a lot of those. Some where they write their own lease agreement,
yeah,
and that there's a special provision that the TAR lease has in ours on the very bottom of the first
mhm,
page, where it says that when this lease expires, it automatically moves to a month-to-month agreement with all the same language, and you
okay,
want to have that in there. That way, you're never out of lease.
yeah, okay,
Also, so a lot of these other these landlords who write their own leases, they don't have those types of provisions in there that's protect at the end. Usually, if we get a lease that's if we get a tenant that doesn't have a lease, we'll try to put them on a new lease
mhm,
immediately with all of our language. That way we have a uniform protection. And that's usually why they come to us, is because there's an issue that they're having with the tenant that they can't enforce and they don't have
mhm,
any legal language around it that
yeah.
it gives them protection.
And I want to differentiate on two things because we are talking about two separate things. One is a situation where there's no lease whatsoever. That's just an oral lease, and you just treat that as a month-to-month tenancy. And then what you're talking about, Robert, and that's a good point as well, is the what we call an evergreen clause in the TAR lease, where when their term runs out, you usually sign them to a 12-month term. When their term runs out, then they end up being renewed on a month to month basis. Robert, you're doing the right thing. They come to us, they don't have a lease, get them in the TR lease. If it runs out, then they're on a month to month. Or Robert, when they come to you and they have some type of lease or a TAR lease that hasn't been renewed, they're on a month to month. You're going to try to get them into a new term and out of the month to month with you, typically with a lease amendment or maybe just a new TAR lease. So two
And another
different
thing
things.
too is these when we get those, they're usually on rents that are way old and way
Yeah.
under market. And so that gives us an opportunity to get these properties back onto a market rate, more money in the landlord's pocket. Now they're protected. It's just worth it for everybody in the end.
Yeah. Couple little side note here. If we do get one that's an oral month-to-month tenancy and you want to terminate that tenant, you have to give a 30-day written notice in Texas. That's under Property Code Section 91.001. The only exception, there's more than one, but the biggest exception is if your tenant's in breach, if they're behind on rent, then you don't need to give them the 30-day notice. You can just do the 3-day notice to vacate. I said when we do evictions, I see JP judges get that wrong all the time. JP court judges are not lawyers. And if you don't have a written lease, you'll often see a justice of the peace say, go out and give them a 30-day notice. In which case, when I was a young lawyer, I would say, Judge, I think you misunderstand the code. That's not required because the tenant's in breach, and the judge would just tell me to go do it anyway. So I stopped arguing with judges once I became an older lawyer, and now I just do what they tell me. And unless they really get it wrong, and then I mandamus them, but that's another topic for the legal podcast. That brings our show to a close. I've been your host, Phil Silverman. Robert Vernon has been my co-host. Like us, follow us, review us wherever you get your podcast. And as a reminder, nothing in the show is to be considered legal advice or investment advice, and this has all been for entertainment purposes only. If you've got a question about real estate or there's something you'd like us to cover, please email us at info@silbermanrealty.com. That's Silberman, the less common spelling, with a B as in boy, as opposed to V as in Victor. Tell us you want it publicly answered in the podcast. Everybody have a great week and weekend.
Have a good one.